So again, everyone, thank you for taking time out of your day. The next few moments, we're going to be sharing some simple tips on making larger sales with your middle market clients. And again, this is on selling term and basic term ideas and structuring this so you may have some sales ideas to go out there today, the rest of the week, rest of the year, into the new year, and give you some new ideas, hopefully, or rehash some ideas that you've been using in the past but maybe you've gotten away from to help you help your clients and as well help sell some larger cases. So quickly, why do clients buy term? Well, many clients know it. You know, we see advertising on television, we hear term advertising on the radio, on the web, in newspapers, magazines, direct mail, and pretty much every form of marketing out there for life insurance. As a consumer, we see that out there. Cheap term rates on the radio, cheap term rates on TV. And again, it's inexpensive when we compare it to our traditional whole life non-participating or dividend-paying participating whole life products or universal life index universal life products. It's obviously cheaper. And clients tend to buy it because the average American family has other household expenses that is weighing on them. And as we know, as insurance professionals, we have to show the need for the life insurance and why it's necessary. So as producers, why are we selling term? Well, it's what our clients know, right? It's inexpensive, easy to explain, it's easy. And for those of you who are doing other markets, might be in financial planning, group insurance, Medicare, other markets, home and auto, property and casualty insurance, the perception of selling something inexpensive like term might provide a little safety from not harming another sale or your first line of business. If you have a home and auto client, you don't want to upset the apple cart by trying to oversell maybe a life policy. So again, it's easy to sell. It's the path of least resistance. What my client wanted, and I didn't want to lose the sale. And obviously, term in terms of where the market is, income replacement, mortgage protection, time-sensitive life insurance needs. So the idea today is let's maybe look at some other opportunities, change the script from selling what is easy to providing our clients more value. So that starts with education, right? We're educators, we're coaches in terms of our clients. Great agents listen to their clients. We listen more than we talk. We ask them key questions, why they are interested in purchasing insurance. Listening will help guide us to our clients' objectives and to solutions that best suit their needs. We educate and teach our clients on the types of insurance available. Using visual aids here can really help in that process. One such visual aid that is consumer approved that I find a great value is offered through one of our partner companies, Cincinnati Life. Now, it's really not direct. I mean, this is direct towards Cincinnati products, but as you can see, the plan types can be used with really any carrier. And what I really like about this is it explains the different types of insurance, obviously starting with term, what it's used for. You know, you have 10, 15, 20, 25, and 30-year level term plans on a guaranteed period of time, guaranteed premium. Obviously, this has the lowest initial premium, term. It is convertible to any permanent plan with Cincinnati. You're not building any cash value, Mr. or Mrs. Client, and it's used for short-term coverage for a defined coverage period. So I'll put maybe one little dollar sign here. Then we step up to return of premium term. Now, many of you are familiar with return of premium term. What I really like about the Cincinnati plan with their return of premium term is it offers more options than most return of premium terms. So one, this is for 20, 25, and 30 years. Again, it's a lower initial premium than what we're going to find with guaranteed universal, or whole life products. But it gives you the same conversion privilege as traditional term. It gives Obviously, a return of premium, and that's a full return of premium at the end of the initial term period, and there is a surrender value if you surrender prior to the initial term. If a client converts with the return of premium plan here, they can use their lump sum amount that they get and roll it into that policy. I'll show you that later. Very nice benefit, unique to Cincinnati. So there's a lot of options which we'll take a look at later. It also allows for a purchase of a paid-up life insurance plan, which is very nice. So we'll put $2 signs here for the return of premium. Then we go over to universal, higher initial premium, flexible, but you still have guaranteed death benefits with some of these plans, but you're not guaranteeing the cash value. So you have permanent coverage, but we're stepping up in premium. And then really the highest cost of our permanent structure would be the whole life, because we're guaranteeing death benefit and we're guaranteeing cash growth into that plan. So in terms of a visual aid with clients, you're looking at a very nice representation here of all the products available on the market, starting with term all the way to whole life. And we just move up the scale from lowest cost to highest cost. Many times when we do this with our clients, they're going to say, yeah, I do have a permanent need, or I do like the idea of this return of premium here. I like the idea of getting my money back or having these options without having the higher price tag of these. So that gives us an opportunity to present that type of sale. So let's look at a sample term case. A 40-year-old male, $250,000 need, 25 years. That'll take him to retirement, to age 65 or near retirement, and cover his family during those income years. $250,000 is not a lot of insurance. It's kind of the plain vanilla. Maybe 15 years ago, 100,000 was the normal kind of plain vanilla rate. Seems like $250,000 is now taking over that $100,000 rate. But basic needs of life insurance until retirement, covering the mortgage, income replacement, etc. So what most agents, or what I see happening, is you can go right to our website, go under departments and to life markets, and you can then go down to quoting tools and run a quote for a client very easily. Very simple term quote. Or you can give us a call here at URL, our life markets representatives, and they'll help you out with a quote and give you the quote for that rate. So what most do, we'll spreadsheet the term, what was asked of us by our client, and provide the lowest rates on term here. And here's 4 sample rates from 4 of our carriers, from Protective, Cincinnati, American General, and Transamerica. So the lowest rate here is $32.73 monthly for a 25-year level term. So what can we do? Well, let's offer a couple of additional solutions to provide the client. I always like to go in with a term and permanent solution, and it can be small. So if the client, if you're using the visual aid, understands the need of having something permanent on the back end, it could be something just small for final expense needs, or just something small to have when the term goes away. At URL, we have guaranteed universal life policies as low as $25,000. We have whole life policies as low as $2,000 to $10,000, depending on the carrier. So a small permanent policy, even enough for final expense needs, is a great combination with a term sale. And then the other option is the return of premium option, as we saw in that visual aid as well. So the term perm sale, term and permanent, by adding an extra permanent product, here's just a couple solutions for that same client wanting $250,000. We can see right here we have $18.90 for a $10,000 whole life paid up at age 65. Now that policy is through Cincinnati Life. It's a non-par whole life policy. At $27.83, it's a $25,000 guaranteed indexed universal life paid up at age 65. That's with North American Company. That is a guaranteed plan, so that premium paid to age 65, no additional payments after that, will guarantee the policy to age 120. And it's on an indexed chassis as well, so there will be some opportunity for cash accumulation in that plan. And then at $36.63, that is the lowest cost guaranteed universal life paid up at age 100. So pay to 100, policy guaranteed to $150,000 at $36.63, and that was with Protective Life Insurance Company. So a simple term permanent sale. Will give us a premium going from $32.73 for just the term to as little as $51.63 with the $10,000 whole life, $60.56 with the $25,000 guaranteed index UL, and $69.36 with a $50,000 guaranteed universal life plan. Now, with the guaranteed universal life, you can run those on our quote engine. You cannot run a paid up at age 65 guaranteed UL on the quote engine. That would require company software, or you can also use WinFlex Web for that. Joey Fry, Matt Alina, and myself here at URL can assist you with those quotes as well if you'd like us to run those on some of your term life clients. Now, another option we have would be the return of premium term. Now, the return of premium term is going to be a similar option where you're not just giving your client term, you're giving them term with options. It is going to be more expensive. We're looking at a $250,000 25-year return of premium term at $85.80. Less expensive than if we go full permanent, more expensive than the traditional term, a nice middle ground. So what we see here at $85.80 is, and these you can run on the quote engine. However, I highly recommend doing these particular quotes on the company software or WinFlex Web so you can see an illustration. If you don't want to do that yourself, call us at URL. We will run these for you. The visual aid of showing the cash value percentage, the policy value, cash value they get back, and the paid up insurance is much better than just showing a spreadsheet of return of premium rates from the quote engine. So from here at $85.80, it's going to show, if you can notice, in the first 5 years on a 25-year term, there is no cash value percentage they get back, no policy value or paid up insurance they can offer. But starting in year 6, they will get something back if they surrender their policy. And as you can see, that percentage grows all the way to 100% in the 25th year on a 25-year term. You can also offer this on a 20-year term or a 30-year term. So at the end of the policy, they get all of their money back, 100% of the premiums paid. The policy value is $25,740. So at age 65, if Mr. Client doesn't want his insurance anymore, he can surrender his policy and get $25,740 back. That's option 1. Option 2 is he still foresees the need for insurance. He can take that $25,740 and it buys him $52,000 even of insurance paid up for the rest of his life. That's option 2. The third option is he can convert that $250,000 up to $250,000 at his same preferred rate here, and in comparison to some other return of premium plans, he can use this $25,740 value into his conversion credit. So let's do this. Let's look at using the $25,740, rolling it into a conversion at age 65, and solving for the same premium of $85.80. So we're not going to increase this premium at age 65. We are going to reduce the death benefit on conversion, roll in this $25,740, and let's see what it buys him. So if we do that, if we put the lump sum of $25,740 in at conversion, keep the premium at $85.80, he now has a death benefit guaranteed to age 120 of $103,832. Now, he can convert the entire $250,000. This is a solution that keeps the premium the same. Client recognizes that there's a need for insurance after age 65, and it might be a need for insurance more than the paid up $52,000 amount that he would get on the return of premium term. So we convert it with the lump sum in, and you're at $85.80. So the question would be, what would the cost be if we didn't roll over that amount? So if I spreadsheeted all of the guaranteed ULs today, and we rolled that over, assuming no product changes in the next 25 years, which is silly because there will be product changes, but hypothetically, if you did it and went out on the street outside of conversion, it would cost $188.52, over $100 more a month, without that rolling that money into the plan. Within Cincinnati, in the same company, if you just converted without the roller, it would be $224.81. So that return of premium benefit gives your clients a lot of options to look at. Gives them the option of getting their money back, all of their money back at the end of the term, a portion of it back while the policy is in force before the end of the initial term plan, a paid up option at any time in that period of time, and a conversion option using the lump sum. A lot of options to present to the client. So sales tip number 2, very simply, is do a needs analysis with your client. Many times you're going to find the amount of coverage maybe in your mind of what they need or in the client's mind of what they need isn't as much as when you do a proper needs analysis with your client. So needs analysis, common mistake, we're being order takers and not advisors to our clients. After listening to the client's needs and concerns, we can determine the amount of insurance and type that's best suited for that particular client and their family, and use the needs analysis calculator to best determine your client's life insurance needs. If you don't have a needs analysis calculator or tool that you're currently using, there is a great one. There's no cost to using it. It's at lifehappens.org, www.lifehappens.org. If you go under there, you can calculate your client's needs using the needs analysis calculator on their website. If you use a smartphone or tablet, I highly recommend downloading the Life Happens Life Insurance Needs Analysis Calculator. It's a great tool. You can go on Android's Google Play, search for apps, or you can go on the iPhone App Store and find it there. It's free, and it's a great tool to use with your clients. So we looked at that 40-year-old. He's got a husband, wife, 2 children, ages 10 and 7, dual income family, total household income approximately $100,000, and the client wanted a quote for $250,000. After putting in a very simple needs analysis that just takes a couple minutes at maximum, we found the actual lump sum need at death is over $421,000, and the total need is over $578,000. So again, by simply doing this and presenting this to your client, and this is a snapshot of once you put in all the information, what it would look like when you print it out and provide that to your client. So this is based on the information that they're providing you. Again, we're being listeners, asking a couple key questions. They're providing us the information, and we're providing the solution. So from here, just looking at a $250,000 quote to a $579,000 quote based on this client's needs, we're going from a $32.73 monthly premium to a $65 rough monthly premium on the same coverage. So we do sometimes see a client get sticker shock on a large lump sum death benefit. I've heard from partner agents and some clients. I don't like the idea of leaving my spouse with a large lump sum benefit, kind of that lottery idea. You get that much money, it's kind of like winning the lottery. Most lottery winners lose those entire benefits within the first 5 years of having them, so they kind of have that remorse or that in the back of their head. They don't want that to happen. So another option that we can provide, this is through Protective. You can do it with, we also have Transamerica that offers this type of benefit, and some others. This is looking at a $250,000 lump sum benefit to pay for those initial needs. The client had roughly $20,000 in either simple debt like credit cards, auto loans, things of that nature, $150,000 on their mortgage. They wanted to put some money aside for their children's education. So a $250,000 lump sum seemed about the right amount of lump sum. But then we looked at $2,500 monthly for the next 15 years to help supplement the income. Now again, it's going to help supplement that. The spouse is still continuing to work. So this is an easier pill for some clients to swallow than seeing a number of, let's say, $700,000 in total death benefit or $579,000 of total benefit. So in this scenario, we're offering a $250,000 lump sum, $2,500 for 15 years, a total of $700,000 in total benefit for $68.41 monthly, versus $579,000 lump sum for $65.43. For nearly the same cost, you can provide this type of benefit as well. Something, again, we can run here at URL, not something you can do on the quote engine, but you can do it through company software. We can certainly provide the quotes like this for you as well. With the Protective product, it's pretty unique. You can do this on term. You can do this on permanent. It works well in pension maximization sales, where you can do just a monthly income benefit and a very small death benefit. It doesn't have to be a $250,000, doesn't have to be $100,000. You can do a $10,000 or $20,000 lump sum with a monthly income stream or annual income stream. So you can tailor make this for your clients and make it very unique for your clients' needs by simply asking a few questions of, what are your outstanding debts? What is your current mortgage loan amount at? And what would you need or what would your family need on a monthly basis to help pay the bills, utilities, child care, education, health care, etc. Monthly number there for a number of years, and a very tailor-made proposal for your client and their needs. So again, keys to selling larger cases: listen to our clients, what their needs are, acting on what we hear, providing those solutions. The needs analysis, even if your client doesn't initially act on it, if you provide a needs analysis and it's a number that they're not going to act on, you've planted the seed for later. Maybe it's the next sale. When you do an annual review with your clients, you can come back to that needs analysis and say, we covered the $250,000 need last year, but we still had a total need of around $580,000. So it's planting that seed for future as well. And again, presenting value to your clients, not just a quote. Offering different product solutions for now and down the road, and showing them the knowledge and those different sales ideas to help them and their family. So URL currently, as you noticed, if you were on prior to the presentation, we do have a couple bonuses going on here. We have our touchdown bonus going on still through the end of November with just 2 paid apps. We'll give you an additional $50. If you do 6 paid applications during the contest period, it's another $250 bonus. If you write a big case of 4,000 of target or higher, it's a 5% additional on top of the compensation. And any new agents to URL get a $25 bonus for any application, their first application they submit to URL. Cincinnati Life just lowered some term rates. So we wanted to share a little bonus between now and the end or middle of December, $25 Visa gift card for any Cincinnati Life application submitted now, along with their nice new term rates. So those are two bonuses that we have going on. For those unfamiliar with URL's Life Markets team, this is our team here. Again, my name is Steve Clemens. On marketing and sales support, if you need help with assistance and quotes, you would want to contact Matt or Joey for assistance on quotes. And when you put in new business, Rosemary and Rachel are your new business specialists that will scrub the apps and help you through that process. Judy Warner's in licensing, so if you're new to URL, Judy would help you through the licensing onboarding process. Again, new to URL, our website is urlinsgroup.com. If you currently don't have a username and password, you can use our temporary username and password. Temporary username is the word grand, password is Cayman for our sales convention for 2015 production. Both are in lowercase letters, so please put those in. They're case sensitive. That will get you anywhere in the site you need to go to run quotes, review product information, underwriting guides, etc. Again, you can quote term life products, return of premium products, guaranteed universal, and even final expense whole life quotes on our website. And quite simply, by going through there, you can check off up to 8 different carriers, compare the checked, and it'll spreadsheet 8 on one page very, very easily and effectively. Our final expense quote tool will also provide you quotes on final expense insurance, and you can run those on our website as well. You can get forms, applications, new business, as well as some policyholder service forms on our website very easily. We offer life marketing tools on our website for different markets, for the term markets, for universal life, index universal life markets as well, whole life marketing tools, final expense marketing tools. I believe one of the most underused and effective marketing tools you can use on life insurance sales, different sales concepts, products, are the North American marketing tools on our area of the website. They have different sales concepts, client videos, client brochures, checklists, worksheets that you can use, pull right off of that website. It is not password protected. You can go right on from URL site, pull that information if you're working on a key person policy, a business continuation buy-sell, executive bonus, pension maximization, college planning, retirement planning. There's all sorts of different nice marketing materials, client videos, and sales pieces that are going to help you through that sales process. Great resource here on our website. And again, for quotes and assistance on your next life case, Matt and Joey are available. Their extensions and email addresses are right here. They're going to be happy to help on your next case. So if you wanted a small universal or whole life policy to accompany a term quote, or you wanted to see a return of premium illustration run, or if you needed help doing a needs analysis, those are things that we can certainly help you with and help you through that process. And Matt and Joey will be your first line of support here at URL to help you with that. And at the end, I just wanted to say thank you for those who've partnered with URL, and we do appreciate the business as always. So if you do have any additional questions on this particular subject, on any of these term sales ideas, please reach out to Joey, Matt, and myself at URL. Our number is down there, and we will be happy to assist you with any of those cases that you have that you're working on. If anyone has any questions at this time, I'll be happy to field any questions you have. You can simply type them into the question box at the bottom, or you can raise your hand on the attendee piece, and I can unmute the phone to assist you with whatever questions you have.